Hi everyone, it's Ken here from Smart Forex Education. Today what we're going to take a look at in greater depth is the Australian dollar versus the Japanese yen. Now this specific pair is generally a leading indicator or a leading Forex pair, which shows whether the market's more risk adverse or there's more appetite for the market. And what I mean by that, if the market's more risk adverse, it means that generally traders are fearful about the market or about the fundamentals of the market. So potentially you'll find that supply will outweigh demand and the price will generally be decreasing in value. If there's more risk appetite for the market, it will basically mean that there's more interest, there's more speculators, there's an increase in volume, and people are more optimistic about the market. So generally what you tend to see is as a heads up, let's just say, is the Australian dollar versus Japanese yen will generally move slightly ahead by a slight small difference prior or before the other major markets move. Now there was a very, very nice opportunity that we took on today's trade, and I want to actually take you through it. Now I'm sure you've been looking through our trading strategies, and based on our trading strategy we're going to focus today on the flush trade. Okay, so the flush trade is very, very profitable. It's a trade that looks to target and take advantage of retail traders and really trading in the direction of what the hedge funds, the commercials, the institutionals are doing with their money. Okay, because obviously they equate for large volume. 70 to 80% of the volume in the Forex markets are speculators of hedge funds, mutual funds, pension funds. So we need to be aware initially of what they're doing with the money. So we saw a nice steady move to the upside. That was on Thursday, yesterday, and the price retraced to the downside slightly. We heard some low important news that came out in Europe today. But we saw a bit of a sell-off. It tested the highs as we saw another flush trade to the upside. Just going to show you here on my tool. Let's just pull this up. Okay, so you can see the previous high that tested on 19th. So price today, or early this morning, actually tested the high and broke slightly above it. Sucked in trades to the upside, or i.e. traders that have trading strategies that will buy on a breakout. Okay, so traders that bought on a breakout, this high got caught out, and then we saw a reversal, or the flush trade we call it. So I'm going to write down here. So basically when you see a flush trade, you know that, okay, market test the highs, too expensive, it has to move back to a form of value. Now, a lot of the members know exactly what I mean by value, and if you don't worry. Value is generally when the market is moving from an imbalance, or when a price is expensive in this area, to a balance where you'll find a large volume, okay, or a large amount of buyers and sellers. So we knew that this area, the market found a new high, broke above the previous day's high. Then there was a lack of buying strength. Then we saw a flush move back down to an area of value. Now we were looking at an opportunity of an entry on the trade just below the low of the day, short-term low of the day early in the morning. Okay, and we were aware that traders or the large institutions were looking to push this price lower down to test the short-term low, and not just test slightly above it. If I zoom in here, for a bounce just below the lows, okay, and it occurred. Just going to show you here. Okay, so what we saw is we saw a new low, okay, new low in price for the day. And what also happens here, when there's a new low of price for the day, it will also generally flush out a lot of sell limit orders. Okay, so traders that entered long in a position potentially have stop loss orders below the previous day's low. Okay, so we'll put here stop loss order. Okay, sell stop order. So these are individuals that had entered the trade and saw a nice move, whatever price they entered, and for whatever reason maybe missed their target, or they don't have correct exit targets, and this is a big problem with a lot of traders. Market literally moves back close to their entry price. They don't want to obviously sell out the position because they were in a nice profit. They're now maybe in a small profit at best, break even. And then what tends to happen, the large traders, we are aware of what's going on in the market. So we will try and push more volume in a price, more selling strength to try and search or look for orders, okay, stop orders. So this occurred where it broke through just the lows, and then there was another opportunity, okay, to get into the trade, but this time was a long. So we're aware of this. And there was another flush trade from the short, and this was a flush trade to the upside. Okay. So the flush trade long. These are very, very good structures. One of the strongest and most transparent strategies to enter. A lot of guys are not really aware of this. But this is how we trade, and we've been trading for many, many years now. Okay, so following from this nice opportunity that we did enter on the lows, or the new low for the day, just literally above it. And then we had a nice steady move. We had targets to scale out positions as the market moved higher. So we had contracts or lots to take off the position at specified levels that we had in place. Okay. Which we had. Sorry about this. Okay, so we had levels at this. This is roughly, I know the exact specific levels, but this is a rough guide. We had levels just on the highs. We had level when it broke above the short term high here. And then we also had another level just off the pullback. So we had three levels where we're scaling out of our position and maximizing the trade as it continued to move in our favor. If you want to know more about the flush trade and exactly how it works and the strategies that's really doing well for us and over the last few years, please just pop along to www.smartforexeducation.com. Okay, I'll see you on the other side, guys.